right, I say get a second opinion. I always say that when you're dealing with money because it's always nice to have a fresh set of eyes on things. That's where Nick Hopwood comes in, the founder and president of Peak Wealth. If you're not happy with your current advisor or frustrated that you never hear from your folks, you get your second opinion at peakwm.com, peakwm.com. Nick, welcome back.
Thank you, Steve. Good to see you today.
Good to see you. It's been a pretty healthy few weeks here on the stock market and so forth. The Dow broke 45,000 for a bit there. The NASDAQ, the S&P, all doing pretty well, it looks like to me. So but I go back to April, Liberation Day, and they're all, oh, my God, it's going to be the worst year ever. We're all going to be broken, poverty-stricken. Tariffs are going to rack up, inflation to levels we haven't seen before. None of those things happened, Nick. In fact, I just saw the biggest deal in trade history, I think, get done with the EU yesterday, $1.35 trillion coming into the United States as a result. Market seems to like it. What say you?
Yeah, Steve, at this point, the S&P is up 9% year to date, and it's looking pretty good. Now, fixed income is up 3.5%, which is also a strong start through July. But, I studied econ. I'm not an economist, but I'm an economics major from the University of Michigan, and all of my academic professors would talk about free trade and how that is utopia for the economy. And I think we're finding out in real time that, people who have been in business and who have experienced trade across the Atlantic for decades might have a different opinion here. And so I was willing to give Trump and the administration, right, the benefit of the doubt in this case, and it seems to be working.
Seems to have worked quite well. I mean, you've got Japan at the table, you've got the EU at the table, you've got Vietnam, the Philippines. China's going to have to come along, otherwise they're going to get punished in this deal. And of course, we continue to bring all this investment into America. It's going to be good for American companies, American workers, and the American economy, it seems. Plus, the de-dollarization has come to a full stop, it seems, because China can't push that through either. So, all pretty good news. All right, so where do you want to go this week, and where do you want to focus your attention for the viewers today?
So I want to also mention that Scott Bessent predicts, Treasury Secretary, he's saying that we should collect approximately $300 billion in tariff revenue in 2025. So, that's not going to put too big of a dent into the $2 trillion deficit, but it's a start. Steve, on Friday night, Happy Gilmore 2 came out. I'm not sure if you're a Happy fan or if your fans are Happy fans, but this is 30 years ago in the making, Happy Gilmore 1 to the second one. And in the second one, I don't want to, spoil the plot.
All right, spoiler alert. Spoiler alert. Just if anybody doesn't want to know what's going on with Happy, just plug your ears for a second. Go ahead.
Yeah. So look, I've got 25 years in experience as a financial advisor, but I was in high school when this movie came out, okay? So, it was in my formative years. Grandma lost Grandma's house. He lost it again because he assaulted someone trying to repo his Ferrari. So as the story goes. And so here's my public service announcement for everyone. Okay, if you are accused of a felony and convicted, right, they're going to take the house. They're going to sue you and take the house. But if you can have a good lawyer and plead down to a misdemeanor, your umbrella policy is going to cover this lawsuit. And so then you can keep Grandma's house. So look, make sure you have an umbrella policy, please.
So wait a second. Just so I'm clear on this. We have an umbrella policy. Of course, I don't consider myself committing many felonies, but you're telling me misdemeanors are covered, felonies are not with these umbrella policies, which an insurance policy, basically it's a catch-all in case anything crazy happens, right?
That's right. And so like Happy assaulted the gentleman. He punched him in the face. He slammed his head against the car. It could be considered a felony. That's not really my area. But if you have a good lawyer and you have a good umbrella policy, you can probably keep your house.
Well, there you go. All right, keep your house. All right, on a more serious note, now don't slam somebody's face into the car and expect to get away with it. Number two, speaking of getting your face slammed, Donald Trump slamming Jerome over there at the Fed every day, Jerome Powell every day, it seems like. But it doesn't seem to faze him much. They spent time together talking about the $3 billion renovations to the Fed building, which Trump was not impressed with. Are we going to see any change at the Fed? Could they give us a break so that housing could be moving again, get us better rates on mortgages and used cars? I don't think it's going to happen, but what does your crystal ball say?
I think you're right. I think July they're going to hold. The meeting is this week, so we're expecting no change with the rates. The next meeting after this is September, and there's about a 60% probability that we could see a rate cut. But also, as you mentioned, Trump has been slamming Powell, basically body slamming him, okay? And so the market looks at the rates. The market desperately wants lower rates, but the market also wants stability, and it trusts Jerome Powell to get the job done. So it would be an interesting question to see if Trump replaces Powell, how the market would respond. My gut instinct is that the market would sell off. So do we want lower rates? Yes. But do we want stability? Perhaps even more. And so I doubt that Trump will do anything with Powell. I think it's a very low probability of him being replaced.
All right. So the GDP coming out, was it tomorrow the GDP comes out?
Yeah.
Last quarter was negative. Does that mean are we in a recession?
I don't think so. I think the first quarter was about negative 0.5% as a result of all the imports that we had front running the tariff expectations. So I think that was an artificial negative quarter. The expectations for this quarter are about 2.3%, kind of back on track. Although everybody, including Trump, will say we need to run hotter. We need to be at 3. We need to have a goal of over 3% if we want to grow ourselves out of these deficits and debts.
Yeah. All right. And we've got a graphic here real quickly. We got to get to it so we can put it up there. What is this real quick?
Yeah, Steve, most people think, hey, when it comes to what I can control with my finances, it's what can I save? What can I spend? How can I invest my money? Should it be aggressive or conservative, depending on my situation? They think that's all that they can control. This chart says that the market returns are out of your control. That's correct.
Hold your thought right there. We hold your thought. We're up against a break here. We got to go through the break. We don't normally do this, but we're going to do this because we want to see that when we come back. More with Nick Hopwood right after the break on the Steve Gruber Show. Want to make sure your money is protected. All right, real quickly with Nick Hopwood here as we wrap this out. I want to make sure that we wrap this out and didn't cut him short. Nick, all right, back to the chart real quick and tell the folks what they control and what they can't.
Yeah, Steve, on this chart, it says that the market returns are out of your control, which is true technically, but I want to take it one step further and say how you respond to the market is fully in your control. Think about all the folks, the countless folks who cashed out in April, locked in losses year to date, and they're probably still in cash. And we just talked about how the S&P is up 9% this year, and they're probably sitting there with negative returns. So it's how you respond to the market that counts.
There you go. All right, if you want a second opinion with Nick, the QR code is going to be on your screen here. There it is. For those of you on the streaming platforms or watching on Real America's Voice TV, you can always get a second opinion with Nick by going to that location and learning more. Nick Hopwood, peakwm.com. If you just want to do it the old-fashioned way, you can do that too. Nick, always a pleasure. Thank you for being here, as always.
My pleasure, Steve. Thank you.
All right, we'll take a look at the numbers as they come out here over the week. Will the Fed lower rates? I don't think so. I don't think, because I don't think they want to help Donald Trump at all, number one, which is too bad because it doesn't really help or hurt Donald Trump. It helps and hurts the American citizens. That's the challenge. Who's getting hurt? Well, people that have to pay higher mortgage rates or can't get a house or can't get a used car, you got it.